All right, guys, welcome back for another update to the Bitcoin Trading Journal series. I want to post an update to a trade idea I posted yesterday, a live trade in Bitcoin. I know not a lot has happened between now and yesterday as far as price action, but there is some things going on in the lower time frame, so I want to get into the nuances on that. Again, if you caught some of my previous videos, I was looking at this level, a close above these highs right here for confirmation on Bitcoin. That this was a macro liquidity run, below these lows here. You had stop losses getting ran below these lows right here on major volume expansion. And then, price runs below those lows on heavy volume and kind of oscillates around before breaking up and creating new highs right there. So, we have confirmation of the trade idea. And really, what I want to do today is first off look at some areas on the price chart. In the previous video, I mentioned this 37,151 level. That was a pretty big area of interest, and that was the monthly level that I used as invalidation on the downside. So that level there, pretty clear and obvious area, but it's a little bit further away from price right now. So I want to use something, a price distinction that's a little bit closer to where we are currently. And right now, that's this price action right here, this extension right there. You may ask, why am I not using the price extension right here? Well, if you get down to it, uh, you know, uh, this price extension was essentially filled, or at least I look at this as filled, right? It came a couple $100 away from it. So, I would interpret that as a front run of the fill and essentially filled. If I see price action like that, I'm generally not going to be that interested in it. It doesn't mean it can't have some impact on price. You could certainly make a case for that, but I'm looking more so at this obviously untapped price distinction up here, and that's at the 34,222 level. So I put a 25 sell limit order up there. I also put a 15 sell limit order just below it, just as a little bit of a front run order, just so if price doesn't push all the way up there, I do get filled a little bit. I might take profits. The idea being that you want to be a little more cavalier in the way that you take off risk, as opposed to adding on risk where you wouldn't want to feed a position. You would want to be a little bit more conservative and a little bit further away from price when you're interacting with price. Now, if we get on the very low time frames, you may have noticed that I have this long position open from 39,632, and you can see prices moved in my favor pretty dramatically, actually. But some things have changed since I uploaded the video yesterday. I uploaded the video around yesterday's daily close. Price action was up around here, so it is basically still around the same level it was at the close. But we didn't have this low here, and we didn't have this high up here. And what's the significance of this low right here? Well, this low is the old historic low right here. So you see price ran up, closed above it, came down, tested off it, and there's your area of interest right there. And that's the area you see on the 15-minute price chart. So, we had talked about, well, say you had waited for the close for confirmation to, you know, add risk to a long position. Well, we were kind of left with the issue of like, well, where do you add risk after the close here? Well, that's a natural place, right? You're looking for the close above this high right there, and natural place to add risk is on the retest of that high, and you can see that was what happened in today's price action. And then afterwards, price moved up and ran above these highs right here. And then what's even more important than that is slam back down into the range after running above those highs right there. And now that's pretty significant because, especially on a 4 hour, if you look at that, it's starting to look like distribution right there. When you get you get this volatility expansion, pretty dramatically from a winning position. And again, this ties into like how do you manage a pretty significant position that has started to run in your favor and volatility has expanded in your direction. Well, you want to start actively managing the position and in pulling in profit from the market. And the only way to do that is to manage the equity on the position, which is to take profit. So that's really what I'm doing right now, especially after seeing this price distinction. I didn't take profit above these highs here when we had this run here because I didn't know that this price distinction would happen. For all we know, it could have had another parabolic, not parabolic, but parabolic for this time frame move up into some higher price distinction up here. But now we have something different. Not necessarily. Again, this is an hourly time frame, so it's not the end of the world. It's just relevant on that particular time frame. So when I saw price come down to this level and bounce, actually, you can see this red arrow right here. Actually took 20 units off this position. So the position was 105 units. I took 20 off. We can go down to the paper trading account. You can already see this position has moved in my favor pretty dramatically already. Essentially, we're in $230,000 of profit, and starting to manage equity on the position pretty dramatically already. So you know, so I took 20 lots off the position on the bounce here after the throwdown back into the range, and I put this sell stop here, and then a sell stop here as well. I can actually move that up to this level here at 31, and maybe take a little bit of risk off it. So let's see, 31, 180, and move that down to maybe 30 lots. Yeah, it doesn't have to be perfect, but the idea is that after we see this distinction, then if price collapses from there, you have an apex formation up here. You want your stop losses there, right? If volatility is going to expand to the downside on this particular time frame that we're looking at. So that kind of leaves you with the question of, well, if these stops do get hit and price starts collapsing towards my initial entry, well, where do I start looking to add risk? Identified this level here. So you have your price pause here. This would really be the shelf top, or price pause top, essentially. And I use the bodies of the candles just to be a little bit more conservative, as opposed to the rationale for when you're taking profit, you want to be more eager. So maybe if you're taking profit, you would use the wicks, right? Because you just want your orders to get filled. But on the entry, maybe you use bodies. It's a little bit more conservative because the dynamic is different, right? You're adding risk rather than removing risk. So you want to be a little bit more conservative in how you do that. So in that sense, I round down, using the bodies and also rounding down a little bit from there. And also I have order at the bottom. And this is really significant because if you watched the video yesterday, you know that I was actually using this level as a stop loss, right? Because you have this daily run above these highs, and then then you can really use these levels. This is really when the low time frames start to shine. When you have this type of behavior on like a daily chart, then you go to the 15-minute, and you can see, look, respects that right there, the retest. But you also have this volume distinction here. So actually, I was looking at this level right here. I'm sorry, excuse me, as a stop loss area. Because you have these lows push in, and the volume comes in, sending above these old historic highs that we looked at on the daily chart. So typically, if you see a throw over above those old historic highs, and then you see volume come in, but then price immediately does a full retrace and takes out the low where the volume was set in for the push above the liquidity, that is generally going to be a swing failure pattern. That's a really bad sign. But again, we don't, price has evolved since yesterday's close, and now we have this low and this low to work with. So we have more dynamic areas to put our stop losses than we did yesterday's previous close. And, that's a good example of how, if you're looking at historical price action, right, you miss all these nuances because they're not even on your radar, right? I mean, historical price action does matter, right? We used it to identify this level right here. We also used it to frame the concept um, of the liquidity breach here, and then the close above the high here. But really, the nuances that occur and develop on the right side of your chart, I mean, that's where the money is. I would go so far as to say you don't even need to understand or be able to trade historical price action to be able to make a living or to make profit in the market. I mean, you can really just utilize these distinctions on the right side of your chart, regardless of what historical price action is doing, and not necessarily be in the best position, but you'll be more active in the way you're managing your position, and that'll naturally put you on the right side of the market when the market does expand in whatever direction. Uh, anyway, yeah, so we've got this 105 position managed. We got a few sell stops here, 20 units, 30 units. So, if price collapses, price can collapse, and I'll actually end up getting a better cost basis. If price were to go all the way down here, I would end up with the same risk on my position, but just a better cost basis, roughly, because the stops were hit up here, risk was added back down here. Again, this is kind of goes along with the philosophy of trying to corner price action. And I use the word corner in the sense that, you can really get price in a position. And this works especially well after a volatility expansion that goes in your favor. And then you can start building, actively managing the position in a way that, you know, kind of whatever happens in price, there's still going to be some type of favorable outcome, right? Something you can work with or something that's going to help you manage your position more effectively. And this is really where options ties in. If you can, build out an options portfolio, and this is, options, if you can manage this skill set and incorporate options into that, um, you're going to probably go trading full time. That's for sure. But anyway, yeah, I like to manage a position in a way that I can sort of push price into an area where I feel like I almost have it in checkmate, so to speak. So we talked about these risk management levels. Now the take profit levels, I didn't have a take profit here, but I'm actually using that level as a take profit. If this is a distribution pattern, right, you get a push up, then a slam back down. Well, you could have one more push up, and in that case, I want to have a take profit at the highs right here. But essentially, uh, I round down a little bit. I don't need to put it all the way up here. The idea is just, if price pushes up one more time for the liquidity above the highs, I want to get filled on that order. I want to get the risk taken off on my position before it goes back into the range. That's kind of the philosophy on that. And I went over the price target above here. That's the price extension from the daily level here, right here. Um, yeah, and that's really kind of the way I'm looking at this position. Um, Again, I am kind of expecting, full disclosure, expecting this inefficiency to get filled. Um, this is a very clear level up here, very significant on the monthly as well. If you followed my previous videos, I was using that as an invalidation. I had a long position from 3888 roughly, got stopped out here. Now, those types of macro levels, the cool thing about them is they have a lot of staying power in the sense that you can revisit them weeks later, and they're still relevant. Now, that probably directly contradicts what I said about historical price action just a few minutes ago. So the one caveat I would add is that it's not like you set a limit order right here, especially if you're entering a short position, right? You can set a limit order there to take profit just because, you need to take profit somewhere. And sometimes it's good to have a limit order. But if you're entering risk on a short position, you don't want to just have your limit order there. That's a whole different thing. You want to be, again, looking at the right side of your chart, looking for the distinctions to form on the lower time frames, kind of around those levels, around those historical levels. So that's how you get an hourly time frame trade confluent with a daily trade. Is you look for those areas or that type of swing to form at that level. Anyway, I hope you guys like this video. Please just make sure, if you like this type of content, just to like the video, subscribe to the channel. Please make sure to sub to the channel and leave a comment below, and I'll catch you guys in the next video.